Alright guys, so by now, I know most of you are familiar with premium and discount zones, but I'm quite sure that most of you who are watching this video have no idea about what is a dealing range. Now, without identifying the proper and valid dealing range, premium and discount zones are not going to work. Alright, they're simply not going to work. And you need to understand what exactly is a dealing range. So in this video, I will explain to you what is a dealing range and how to properly identify your premium and discount zones. So let's start with the video. So over here, what you can see, I have this diagram, and let's first of all know what is a dealing range. So normally what we would do is we would use our Fibonacci, right, from low to the high. And then if price is below the 0.5 level, it is considered to be in a discount. And if the price is above the 0.5 level, it is considered to be in a premium zone. But you can simply not use your Fibonacci on any high and low, or any low or high, if that makes sense. There are some rules to it, okay? So what do you see here? I have drawn out this line. What do you notice here? This leg took out some form of liquidity, right? Before it pushed to the upside, it took out liquidity. So that is the start of our dealing range. If price takes out some form of liquidity, it could be a low, could be a high, could be equal lows, could be equal highs. In this scenario, it took out this low. Now, we can use our Fibonacci from this low because this low took out some form of liquidity. Now, this leg up here also took out some form of liquidity, right? Now, once price takes out both sides of the liquidity, so over here we took out the liquidity, right? And then we had a break of structure, or you could call it a liquidity sweep, if that makes sense. Then you are allowed to use your Fibonacci from the low that swept the liquidity to the high that swept the liquidity, right? Now that is your dealing range. You can then wait for price to dip into a discount zone, and then you can look for confirmation entries, and boom, that would work perfectly. Now this is basically your dealing range. And similarly, if I just move it like that, right? Boom, boom, boom. Liquidity sweep, and then another liquidity sweep. So over here in this short example, you can see this leg took out the liquidity. So that is our start. That is a start of our dealing range, okay? And then price broke the structure, or you could say it did a liquidity sweep. So over here, you can see we took out this level as well. Now you're allowed to use your Fibonacci to identify your premium and discount zones. So simply, you will use your Fibonacci from the high that swept the liquidity to the low that swept the liquidity. And now that is your dealing range. So you're simply waiting for price to dip into premium. Then you can look for any entry model that you know. If you want to know, you can just watch my YouTube videos, and you would simply just take your entry and trade with the order flow. So I hope by now you guys know what is a dealing range, right? Because I know most of people, they would simply use their Fibonacci on every single high and low, right? It makes no sense. There are certain rules to it, and we call it dealing range. And that is exactly how you identify your dealing range. Now, let me show you some examples, and after watching the entire video, you will know exactly what is a dealing range, and you will be identifying the premium and discount zones accurately. So let's move on to the examples now. All right, before moving on to the examples, most of you don't know that I have a private course and a private Discord server. It is currently priced at $97, and it is not necessary to get into my private course. But if you you can take your trading to next level, and I guarantee you this. By enrolling, you get a private Discord server where I share my own trades. So these are market analysis. I share them, and you can take those trades on your own behalf, right? I'm not a financial advisor. Then we got the monthly course update with new videos. So every month there are new videos. And then we got awesome community of successful traders. Then here's the course content. So if you are just starting out, you get all the SMC basics, right? Then you got the basic trading strategies that require no daily bias. And then you get all the ICT essentials that are required for you to become profitable. And then we got the advanced trading strategies. I teach you how to find your monthly, weekly, daily bias very easily. Then we got the market maker models, the second distribution models, the holy grail model, the silver bullet with bias, risk management for prop firm accounts. Here is some proof, me passing the challenges. I am currently managing 4. I missed out 1 here. And here's some proof of students passing the challenge and whatnot. So link is in the description if you are interested, but it is not necessary. So let's move on to the examples now. All right, guys, so here is example number 1, and I'm looking at NZD/USD on the 4-hour time frame. So over here, you can see we have a big push up, right? And what did this leg do? It swept this liquidity right here. So if I draw it out like that, we swept the liquidity and then we had a push to the upside, right? Now watch this leg. We took out this liquidity, right? We took out these highs over here. So now we can use our fib from this low to this high. Now that is our dealing range, okay? We can look to short around here because we were in a premium fair value gap here, right? If that makes sense. But once price dipped into the discount zone, that is when we look to take long positions. When price was in premium, right, you could have looked to take your short positions, but once price dipped into discount, we went long. So as you can see, price dipped into this breaker block around here. As you can see, this is a breaker block and price dipped into it and we had a push to the upside. So very, very simple to, identify your premium and discount zones correctly. A lot of people just miss out on these basics, and these basics make up the whole strategy. So without basics, nothing is going to work. So let me give you guys a couple of more examples. All right, guys, so here is another example. I'm looking at AUD/USD on the 4-hour time frame. So know one thing, this alone is not like an entire trading strategy. You have to, use other things with this. You can either use the auto flow trading strategy that is on my YouTube or any other strategy. The purpose of identifying the dealing range is that you are entering at the right time or at the right place, okay? This is not an entire strategy. This is a very useful tool for you to actually take your trades, but don't use it alone, all right? You need to have some form of context behind the trade that you're gonna take with, with the dealing ranges, if that makes sense. So the auto flow was bullish, right? And you can see there was liquidity here. We took out this low. So that is the start of our dealing range. And then this leg up here took out this liquidity and also took out this high over here. So we use our Fibonacci from the low that swept the liquidity to the high that swept the liquidity. And you can see price dipped into the discount and we had a big expansion to the upside. So very simple, guys. A lot of people just don't use dealing ranges, and I thought I would make a video about this. This is very, very useful, and I think this might be the only piece of puzzle that you were missing. So let me give you guys one more example and then I will end the video. All right, guys, so here is the last example. I'm looking at Euro GBP on the 4-hour time frame. So over here, you can see that we swept this high. So that is our dealing range start. So that is from where our dealing range starts. And over here, you can see we took out this low, took out this low, took out this low, and we took out this low. So our entire dealing range starts from here till here, right? So if I use my fib from the high that swept the liquidity to the low that swept the liquidity, you can see price went into premium, into this premium auto block. And from there onwards, we had a expansion to the downside, and you could have targeted this low here, or probably this low, or maybe even this this auto block here. So yeah, guys, that's pretty much it. If you guys want to learn more about other ICT concepts that are basic but can come in very handy, then let me know and I will make a video on those topics. So I'll see you guys in the next video. Goodbye for now. Take care. Mwah.